Hello everyone and welcome to Exness Education's weekly market outlook. Here we're discussing the key possible idea for trading this week and some of the narratives that are driving that idea. Joining us today we have Stanislav Bernichov. Thank you very much, Stan, for joining us today.
Thank you, Michael. Thank you for having me today.
What's the key idea that you're looking at this week in markets? What do you think is the key kind of focus of movements?
So I think that today we want to play some gold, because if we take a look at the chart, we have seen the breakout during the previous week, and now it looks quite strong because we had 10 days of continuation of the trend, and the big candlestick from February 11 was actually driven by the publication of Consumer Price Index report for the US. So what I'm watching right now is the pullback to the trend line 1850, maybe even lower, but I will try to build a trade from here. However, it's recommended to wait for some confirmation pattern, because you never know how deep this pullback will go. It might go to 1850, 1840, maybe even 1835, because it's not working like described in books. I mean, classical pullback, testing of a trend line, and it's good to go. So in the reality, we have more noise. So yeah, that's a pullback trade. Or you can trade the momentum trade from here, but it doesn't have any very good statistics. Well, the minor scenario is a short trade if gold skyrockets very quickly, and you can actually try to find a short trade from above, but it's unlikely, I would say. Probably the pullback trade might work better.
So with gold having broken above the trend line, can you describe briefly some of the narratives or some of the key factors that have driven that movement?
Yeah, sure. So first of all, we have the publication of Consumer Price Index during the last week, and you see that it was greater than anticipated. It was 0.6 for January versus 0.5 anticipated. So when we have this, we have gold going up as an inflation protection. So I remind you that Consumer Price Index is the major inflation benchmark, and gold is a protection asset. In the previous year, it was not working so well, but in 2022, it seems to be back in play. Also, we see that it doesn't have any negative correlation with 30-year Treasury yields, so they are on the top, but gold is still going up, which means that it has some internal demand, which is quite obvious. When we have the internal demand with the asset, actually we have fundamental money involved, and that's a good idea to buy it. And if you take a look at open interest, it's also growing since the beginning of February for COMEX futures. So 60,000 contracts were added throughout the 2 weeks of February. So I guess that is already a good indication of fundamental money involved.
Mm-hmm. And for many traders, the situation potentially is going to be a risk, trying to find the exact low on the trend line. Do you think there's a way that traders can reduce risk or, find some kind of confirmation for a potential buying trade?
Sure. For example, you can watch for some candlestick pattern to appear, for example, engulfing pattern, or cup and a handle chart formation, or any other chart formation which might help you to identify the exact moment when you can time your entry. There are multiple examples of how we can do that. So the easiest one probably is candlestick patterns.
Okay, great. Thanks very much, Stan. So the key idea for this week is possible buying of gold now that it's moved above the main trend line over the last few weeks. And the narratives that are driving that in focus mainly are American CPI and the rising yields of 30-year Treasury bonds. And the key factor to be aware of to hopefully reduce risk somewhat in a potential buying trade is to look at patterns of candlesticks mainly, and also possibly traditional patterns on the chart. Okay, so thank you very much, Stan, for joining us and giving us your insights today.
Thank you, Michael. Have a good trading week ahead, everyone.